Hi, it's Stuart. You've asked me whether service departments make good investments. And for those that are listening to this video that don't know what service departments are, essentially they're properties, obviously apartments as the name describes, in typically quite a large complex. Now it could be high rise or it could be a lower rise complex, but typically there's more than 30 apartments. And a service department manager leases the property from you, and then they lease it out to individual providers and so forth, or renters, I should say. And they service the property for you, so they do the cleaning and change the laundry and those sorts of things. Now, sometimes they will pay you a fixed fee, and then it's up to them to go and find people to occupy that property, or alternatively, sometimes I'll just charge you a management fee. So it will depend on how occupied the property is, and if they receive $2,000 for that person to stay for a week, they might charge you $1,000, whatever it might be. It doesn't really matter what the arrangements look like. In regards to whether they make good investments, quite often these investments are sold on a yield, which means that they're sold. When we talk about yield, we're really talking about rental income yield or income yield. And that's the carrot that is dangled in front of investors. If you invest and buy this property for $400,000, you're going to earn $50,000 of rental income per year. Doesn't it look like a fantastic deal? And it can be, from an income perspective, it can be a pretty good investment. If you've got the right property in the right location and there's plenty of demand for that property, it's a great outcome. Now, sometimes it won't be. During COVID, for example, a lot of service departments really suffered. Of course, there wasn't much in the way of travel. But as I've spoken about, particularly in my podcast many times, and certainly on this channel, we're investing in property for capital growth, not income. It's the propensity of that asset to double in value every, say, 10 to 12 years. That's what's going to do the heavy lifting. You go and buy a property for $500,000 today. In 10 years' time, that property is worth $1 million. In another 10 years, so 20 years from now, it's worth $2 million. Well, you've got $1.5 million of equity. Sure, you've got to pay capital gains tax on that, but that's the heavy lifting it's doing, the compounding capital growth. That's really what you want to enjoy. Whereas if you receive a lot of income from your investments, you're going to pay a lot of tax each and every year. And so your after-tax return isn't as fantastic as what the pre-tax return looks like. So do service departments generate capital growth? No. Not in my experience, not in my 20 plus years of experience. In fact, they make terrible investments. Firstly, people tend to overpay for these investments because of that carrot that's dangled in front of them, the lure of very high income. Sometimes they're oversold in terms of they're sold for more than what they're actually worth, just because of this ideal or this expectation that you're going to generate a lot of income from the investments. So the price that you pay for these investments are already too high. And then secondly, because they are in a large block of other apartments that are probably identical, there's really no scarcity associated with it. So you're buying a lot of building value. You don't get a lot of attributable underlying land value, and land is the bit that we really want to appreciate. Sometimes you see these investments in capital cities and you think, well, it's bang in the middle of Melbourne, it's great location, etc., etc. Yes, great. But what part of the purchase price are you paying because of the rental income stream? What part is attributable to the actual building and improvements? And what part is the land value? Because it's, again, the land value that you really need to use. So in summary, service departments are almost always a bad investment. Or maybe I could put it this way. In the 22 plus years of running a business and really seeing literally thousands and thousands of investment properties over that time, I haven't seen one service department that I look at and go, wow, that's been a good investment. In fact, 80% or more, I look at them and go, that is a terrible investment. So yes, the income might look good, but there's just very little capital growth. And for that reason, I don't like serviced apartments as investments. Great question, however. Thanks for asking it. And if you have any questions, you're listening to this video, feel free to post on my YouTube channel. Cheers.